Nilesh Sathe, former member IRDAI, and Yashish Dahiya, Chairman and Group CEO, PB Fintech. Welcome to the show, gentlemen.
Thank you. Hi.
Hello. Starting off, the cabinet has cleared this, insurance laws with the headline reforms being 100% FDI insurance. So at a broader level, Nilesh sir, what is the intent of this bill and why now? Why is it happening now from 74 to 100%?
Why is it happening now? I cannot say, but it was overdue, honestly. When the sector opened initially, we were playing very safe and conservative. We allowed only 26% of foreign capital into insurance sector. It was increased in 2015 to 49. Then in 2021, it was increased to 74. And it was high time that it should be increased to 100%. A budget announcement was also there by Honorable Finance Minister. So it was expected. I'm not saying it has come out of the blue, but it was expected and it has come. What is the advantage? Foreign insurance companies always would like to have ownership and control over the insurance companies. What happens when there is a joint venture? The Indian partner may not like to dilute his share and give 100% to the foreign insurance company. So once this is done, there is a possibility that more insurance companies may start operations in India because they will have full ownership and control over the insurance company. Now, there are various insurance companies which are out of top 10, 15 insurance companies. Hardly any foreign insurance company is here except a couple of them. So there is a lot of scope for them to enter our market. And with 100% FDI, the purpose is there will be a long-term investment in insurance sector, because in insurance sector, the beauty is you cannot have a flight of capital. You are not allowed to withdraw capital once you start business. So it will be a permanent foreign investment that will come to India. That is one advantage. And their expertise, their products, their digital ways of selling insurance, all these things will be made available to the customers in India. So this is a big advantage, and I'm sure it will help increase the penetration. Right now, we have got about 82,000 crores capital of foreign insurance companies. That is, foreign capital has come to the extent of 82,000 crores, out of which about 48% is in life insurance and 30% is in general insurance. So this is likely to go up. It must go up. And once this bill is passed by the parliament, and once the IRDAI comes out with regulations, there is a possibility that with risk-based capital that is likely to happen now, maybe some companies which are we do not want to have presence all over India, they may be allowed to start business only on a smaller amount of capital, because although 100 crore is the minimum required, but every insurance company has almost 1,000 crores of capital. And in insurance, the beauty is when you increase your business, you need additional capital, and capital is always scarce. So there is a possibility that more insurance companies will come with separate line of business if they want to, and foreign capital will be a long-term available. Foreign capital will be long-term available for India. So these are the advantages.
Yes, so does it materially change the capital availability? Like you said, that capital always cares. And also, if you talk about product innovations or even competition, because there are very few players currently. So how will it be affecting? It will be, it'll change the dynamics completely.
How it will change dynamics completely, I will tell you. Initially, it was necessary that you must have Indian partner to start insurance business in India. Now, all the major groups, you may take a couple of banks, you know about it, or maybe major groups have already entered insurance, and these groups have to invest capital. Now that is not required. Capital is scarce in India, not abroad. In the sense they want to expand to other jurisdictions. They have got already in a couple of countries they are operating. So India, being a developing economy, they have an eye on India, but did not want to invest for two reasons. One, Indian partner was a must, and second, the ownership and control, as I was saying, they did not want to dilute that to the Indian partner. So now, since 100% capital FDI is allowed in insurance, they will have full control over the insurance operations, and ownership as well. Hence, they will be more keen on coming. They don't have to search for Indian partner to start insurance business. So these are the advantages.
Okay, thank you so much for that, Mr. Shah. And now, Yashish, I'd like you to come in. So from the platform and distribution, standpoint, does higher foreign ownership translate into better products and also pricing for consumers, or does it mainly benefit the insurers' balance sheets?
So I think Nilesh sir has already covered most of the points. See, as far as the platform is concerned, more players with good capital is always great. I don't think the Indian managements were not capable of product innovation. I think that is not a statement I would endorse at all. I think the product innovation is very, very strong in India. However, insurance tends to be a long-term business where a lot of investment is required in order to change market behaviors, and India is at a very low penetration level still, specifically in risk categories like health insurance, term insurance, and these require long gestation periods and deep models to be set in place. So I think it opens up the door, and exactly as Sathe sir said, sometimes it's not about having capital or deploying capital. It is just sometimes difficult to find a partner. If I have to start something and I have to find a partner, there's an effort required in that, and there's alignment of interest required in that, and alignment of investment horizon required in that. That is suddenly not required. And thus, people who are making a lot of money in many other jurisdictions suddenly have the ability to enter a growing market like India. Their challenge usually is growth. And in India, they can find that growth, and they can find deep pockets of innovation. Now, if you ask me specifically from a Policy Bazaar point of view, that's obviously great news, because we welcome people who come in with a very long-term view. Everybody has to make money. There's no doubt about it. And I think one of the critiques we have received as an industry so far is that the return on capital is too low, right? But the return on capital also depends on the time frame that you're looking at. So if you're looking at a longer-term time frame, you can embed different models. Just for example, Policy Bazaar took 15 years to break even. For the first 15 years, the return on capital seemed quite bad. After that, it looks quite good, right? So I think return on capital depends upon what time frame you have for your business model to mature. I think the foreign players can take that call very well compared to many of the domestic, who will be far more short-term in the return requirement.
Yes. So, Yashish, let's zoom in on the consumers also, because that's the crux here. For the average policy holder buying health, life, or even, motor insurance. So what are the tangible changes they should be expecting over the next 1 to 2 years if this bill, becomes a law, and also these players start coming, and how are the Indian players or the existing players gonna, fight back?
India is a large enough market for everybody to succeed. That's number one. So I don't think in India, competition usually spurs growth. It spurs innovation. Now, since you specifically asked about consumers, today, if I look at the middle class, which is about 400 million people, it has the very rich and the people earning, let's say, upwards of about 50,000 rupees a month as a family. That is what the middle class is, and 400 million people. That's a pretty sizable number of people. Today, only 40 million people have a, private health insurance plan. Today, only 15 million people have a term insurance plan, right? That's the reality of our country. So what that now, term insurance is for a family. And so, all I'm trying to say is about 10% of our middle class is covered by insurance right now. Now, all these people understand that they need insurance. I don't think awareness is a problem. They all know the healthcare costs. They all know the cost that a family faces if there's a death, disease, disability in the family. So why are they not buying insurance? Somewhere they haven't derived enough confidence in being able to separate themselves from that 1,000 rupees per month. Typically, they have to spend about 1,000 rupees per month to buy insurance. That's the typical cost for an individual, right? I'm not talking at a family level now. So they are unable to bring about that, and they can, the middle class does spend this 1,000 rupees on many other things. So I think somewhere like if you think of it at a very basic level, in our health insurance, even today, outpatient is really not covered. And so a lot of these things, the models can be set in place with sufficient capital. Because sometimes you just need a huge amount of capital. Like, something like Policy Bazaar needed to spend about 2,000 crores on marketing before the customer became aware that they can start buying online, right? So a lot of capital sometimes is required. They say it takes money to change money. So, and it takes money to change behaviors. So some of those pieces, specifically as Nilesh sir said, digital insurance, a lot of investment has not been able to go into it because people seek returns within the year. But if you are willing to wait 7-8 years to get the returns, like Policy Bazaar waited 15 years, then you may be willing to make those investments, right? And I think those are the pieces that will start to fall in place because these people have done it abroad, and thus, like suppose Policy Bazaar today went to Indonesia, it could have a longer-term view than Indonesian players because it's seen its success in India.
Absolutely.
And so similarly, these players, when they've seen their success in the US or in European markets or in South Africa or Australia, they can come here and take a similar call on, long-term. I don't think from an product perspective itself, we have dearth of talent in India. I certainly don't believe that, but I think capital and its long-term viewpoint can change. Plus, the second thing is new players will come in and new players start with a new horizon while the existing players have been invested for the 10, 15 years. So,
yes. So, as we are very short of time, a very quick question to, Nilesh sir. As a former regulator, how does IRDAI ensure that, the foreign capital does not compromise the policyholders' protection or even claims, discipline?
No, it has already ensured that. Now, in the last 25 years, there are a lot of foreign insurance companies which have entered the market in collaboration with private players. But the question is, nobody has failed. So IRDA has ensured that, and it has to ensure, no doubt about it. So wherever they will find, like risk-based capital will be introduced. So if you are doing more risky business, you will need more capital. If you are doing less risky business or lesser jurisdiction or only one line of business, you may not need so much of capital. So you will be allowed to start operations with lesser capital. So these are the changes which IRDA will have to make in their regulations. Once the bill is passed, within 6 months, statutorily it is required that regulations will be in place, and then according to that, the changes will have to happen. So they will have to bring out regulations taking into account what risks that you have mentioned. It goes without saying.
Yes. So, Nilesh sir, with that, I see that this is certainly a positive, for the Indian consumers per se. Although rightly pointed out by Yashish that they are aware of it. Everybody knows about the health insurance and the policies and everything. But the issue here is that that 1,000 rupees that they want to invest, that they don't feel like investing. So how these players, the foreign players that are going to come in, how they're going to change the mindset also of the people, that's also, a key that we'll have to look out for. But, thank you so much, Yashish and Nilesh, for being there with us and, and sharing your deep insights on this very crucial story for the Indian consumers out there.